Hello everyone and welcome to today's webinar. Today we're going to be going over Equifax Business Revealed. I'm not sure if anybody can see my screen. Hopefully you can see the first slide of my PowerPoint. I have two screens here and I just now figured out today how to get GoToMeeting to see the other screen. So you should be looking at the right screen. If you're not, then it will be a very boring webinar because you're looking at the same screen the whole time. So if for any reason you cannot see my slide that says CreditSuite Equifax Business Revealed, then go ahead and type a question into the questions. Let me know you cannot see that. You can see my GoToWebinar screen instead. If so, I'm going to go ahead and proceed. So I want to thank everybody for attending today. I'm really, really surprised with the registrations today. This has been one of my highest registration webinars in a while, and that surprises me because I never really thought that many people would be interested in Equifax Business. But a while ago, I did one of these on Dun & Bradstreet and got just raving reviews, and people asked me to go through and do them for all bureaus, so I went through, did one for Experian Business, and waited until the very last to do the one for Equifax Business. The reason that I waited until the end to do Equifax is because, quite honestly, they're very hard to do. They're not a big player in the business credit space at all. They are very rarely used as somebody to report to, and there's very few companies that report to them. So it's just, you don't see them around a lot. They're just kind of an afterthought in the business credit building process. But today we're going to dive in. We're going to dissect them. We're going to take a look at Equifax. We're going to look since the inception of this company from a concept all the way to where they are today, their legal troubles along the way. We're going to then dissect an Equifax Business Credit Report. I'm going to show you actually what's on an Equifax Business Credit Report, including the scores you'll see on that Equifax Business Credit Report. I'm even going to break down for you how those scores work and what's involved. We're going to look at business credit repair with Equifax. Everything there is to know about Equifax, we're going to dive into in this webinar. In an hour, we're going to dissect everything that you're going to need to know about Equifax Business. So you'll know how their credit score works, how the business credit reporting works, and you'll be able to get started with building a business credit profile and score with Equifax. So before we get too far, let me introduce myself. For those of you that haven't been on one of my webinars before, my name is Ty Crandall. I'm actually the Director of Business Services here at CreditSuite. Now, what we do here at CreditSuite is we help business owners offer business credit and financing to their customers. So if you own a business and you're thinking about offering such a service to your customers, or you're just interested in getting business credit for yourself and maybe the idea of offering it to customers might be something that you're interested in down the road, feel free to check us out. There's the website, creditsuite.com/business credit. That's creditsuite.com/business credit. There's going to be no pitch in this webinar. I'm not going to get to the end and sell you on something or talk about a webinar discount. This is just straight information. It's just an hour of solid information about Equifax. So if you are interested in learning more, then there you go. You'll see the slide at the end too, where you can go to the site, creditsuite.com/business credit. Have something really cool waiting for you there. I just put that up last week. Pretty excited, pretty proud for you to be able to go there, check it out, and that'll give you a ton of information about offering business credit services, again, if that's something that you're interested in doing. So back to the task at hand. So let's first talk about business credit. I'm not going to do a ton of slides on what business credit is. Most of you on my webinar here already know what business credit is. If you're not familiar with what business credit is, what it can do for you, the steps to build it, feel free to check out like my YouTube channel. My YouTube channel has, I don't know, a few videos you can check out on that topic. But I do want to at least introduce what business credit is, just so we're all on the same page as we dive in here. So when we're talking about corporate credit or business credit, it is the exact same thing. And business credit is credit that is for a business in the business's name. Okay, with business credit, the business itself builds its own credit profile and score. And then with an established credit profile and score, the business can qualify for credit. You know, I found the easiest way to explain business credit is this. It's credit that's linked to your EIN, not your SSN. Pretty simple, right? So when you are able to go out and get credit and leave your Social Security number blank off an application and have them pull your EIN number and give you credit based on that EIN, that is business credit. That is what it is. It's credit in a business name. It's the business itself building its own profile and score, and then the business using its own established profile and score to then obtain credit and financing. So the business credit reporting agencies, a little bit different from the consumer reporting agencies. There are three major companies that do collect business information and publish it: Dun & Bradstreet, Experian, and Equifax. Now, the way I listed those is in order of the ones that you would honestly want to be concerned with. Dun & Bradstreet is by far the biggest player. They are 10 times bigger than the next closest one. They are the company that most people get data from. They are also the company that the majority of companies report data to. Okay, Experian is the closest second to them. Again, 10 times smaller than Dun & Bradstreet, but still very widely used in the actual business space by people that offer business credit, or actually offer financing to businesses. A lot of them use Experian and Dun & Bradstreet to pull reports. Most people don't know this, but if you go into your bank and apply for any kind of financing for your business, they're going to pull your business credit. Now, most people don't know this because there is no Fair Credit Reporting Act in the business world. That's only in the consumer world. The Fair Credit Reporting Act, the FCRA, requires by law that if you go in and apply and get denied, they tell you, hey, you got denied, we pulled your personal credit, we pulled it from Equifax. Well, in the business world, that doesn't exist. As a matter of fact, a lot of personal or business bankers don't even know themselves that their bank pulls business credit, but they absolutely do. And Equifax is one you need to be concerned with because Equifax is one on the business side that big banks do pull. So when it comes to getting business financing and loans and the stuff from big banks you want to get, you really need to be concerned with all three: D&B, Experian, and Equifax. And like I said, D&B is by far larger than both. If you combined Equifax and Experian, they still would be like, D&B would still be like 5 times bigger than Equifax and Experian combined. They're just so big that there's no reporting agency that will ever catch them. But that being said, Equifax is so rare that that's one of the reasons you almost really need to be concerned with them. So there are a few other ones out there that you'll hear about. You will hear about, just like in the consumer reporting world, there's 100 bureaus that are out there. People just don't really know about. As a matter of fact, what you're going to learn today is, everything started as thousands of little bureaus and got bought up by the big ones. So there are other little ones you will hear of. So don't say, well, Ty, come on, there's more than 3. I know there's more than 3, but there's no reason to go through the other ones because you'll rarely, if ever, come across them, whereas these are the 3 that you really want to be concerned with. So companies like PayNet, FDI Insight, or FD Insight, Business Credit USA, Client Checker, these are other reporting agencies that do pull and provide data on businesses, but ones you really don't need to be concerned with because you'll probably never come across them in any scenario that you would be concerned with, like applying for credit. So Dun & Bradstreet's the most common. It's used by most vendors to extend lines of credit. Landlords use them to approve office leases, and Experian mainly used by credit card companies and non-traditional business lenders. So that's pretty important because most financing that takes place in the business world is non-traditional financing. A lot of people, matter of fact, the vast majority of business owners, if you say, hey, where would you go if you want money? They're going to say, I would go to my bank. And if you say, where would you go if your bank says no? They would say, I don't know. Okay, well, what most people don't realize is that SBA loans only account for about 1.1% of all loans on the commercial side. So SBA bank conventional loans are very rare. Most business financing is non-traditional type financing, so this is why you'd really want to be concerned with Dun & Bradstreet and Experian mostly. Equifax is called the Small Business Financial Exchange and is most important for cash lenders such as banks, as I just said. Very important, right? Most of your loans and stuff like that, you're going to go to your bank to apply, which is why Equifax is so important. To concentrate on one and not the others is having lopsided credibility. The reason I put this in here is because it's easy to neglect Equifax. Most companies don't report to them. You have to consciously try and diligently strive to build business credit with Equifax because so few companies report to them. So when you find companies that report to Equifax, you have to grab them, you have to get approved for them because there's so few companies that do, but you don't want to have a lopsided credit file and have really good D&B and Experian and nothing on Equifax because Equifax, again, is what a lot of the banks look at. A business needs to build business credit with all 3 of these agencies to achieve genuine credibility. So let's dive in. Equifax themselves, the oldest and largest credit bureau in existence today. On the consumer side, I should say this. Actually, D&B, if you really track back D&B roots, you could easily say Dun & Bradstreet is older than Equifax, depending on how you look at when they became the companies that they are. Okay, but on the consumer side especially, they are the oldest in existence. They were actually built in 1898. And what's interesting to that is it's 70 years before TransUnion. So on the consumer side, it just goes to kind of give you a separation between when these guys got started. I mean, TransUnion didn't even really get started till the 60s when computers really started to be able to process and manage credit data, whereas Equifax was in this game a long time. Catter and Guy Wolfer actually did this. They actually built this for their customers in their grocery business. So they had people that wanted to buy groceries. The people wanted to buy groceries on credit. They extended these people credit, and then they kept track of how those people paid. That is how credit reporting started, right there. It was as simple as that. So it actually started back in the grocery business, and then he then sold that list to other merchants to offset his own business cost. You know, he's sitting around, these guys are talking to other merchants. Other merchants realize what they're doing, and they say, hey, listen, I'd like to get that information from you. That's valuable to me. Remember, this is the 1800s, right? So towns are a lot smaller. So for somebody to keep track of how other people are paying them, well, other local merchants were very interested in this. They're like, well, listen, we want to get access to that data because we would like to extend those people credit also. And then for the very first time ever, there all of a sudden was a need for this data. There was basically a product being sold and somebody else buying and an audience to buy this data, and credit reporting really started. So the success of this tactic led these guys to Atlanta, where they set up and would become one of the most powerful industries in existence today. They're still actually in Atlanta. The retail credit company was born, okay, and local groceries started using this, and by the early 1900s, it went into the insurance agent, which is mainly where it was really, really used. Okay, 1800s, very end of 1800s, started in the grocery business, and then it went into insurance business and really started to scale from there. And a retail credit company continued to grow into one of the largest bureaus by the 60s, having nearly 300 branches actually in operation. So they collected all kinds of data, and this is where the Fair Credit Reporting Act is about ready to come into place here. And, you know, what's interesting about the Fair Credit Reporting Act, and I highly suggest everybody read it. It is actually not boring reading at all. You'll actually be blown away at how many rights you have under this law that you're not taking advantage of now. And with the FCRA, it was created in the 70s as a response to what these guys were doing. And this is where it starts right here. Equifax was collecting data and selling it. There was no limit to the kind of data they would get and sell. So they would actually get rumors about people's marital lives, divorces, their childhoods. They were really scrutinized for selling this data to anyone that would buy it. A lot of unethical practices. Okay, they would reward people for getting the most dirty dirt on people. People would call people at Equifax would call somebody's neighbor, start a conversation like they were friends and like they knew each other, and mine them for information about their neighbors and would sell that to other neighbors. I mean, it was crazy. There was no limit to the kind of data that Equifax was obtaining and selling at the time. And throughout the 60s, they continued to do this exact same thing. They continue to do that. They also continue to provide the credit reporting services to a lot of different places. But again, insurance companies were really the main purpose of where Equifax was used at this point. Even today, most insurance companies still use Equifax, stemming all the way back from this time period. So almost all major insurance companies were using them to get information on health, habits, morals, finances. You have to keep in mind, think about this, life insurance, health insurance. They're able to pay Equifax to get information on whether the people smoke, what kind of habits they have, what kind of morals they have. All this information that wasn't readily available, people were able to pay Equifax to actually get this information. And Equifax also provided companies with services including investigating insurance claims and making employment records when people were seeking a job. So again, think about where this fits in. Okay, you want to check out a potential employee. You want to check out an insurance claim to make sure it's legitimate. Well, this is where Equifax came in and provided these kind of services heavily for those in the insurance agencies. And it was actually being done by their subsidiary Retail Commercial Agency. RCA was really the name at that point. Equifax wasn't around. Then in the late 60s, Equifax started to compile their data onto computers. So this is the beginning of the computer age. And of course, the credit reporting agencies lined up. They were right there in the beginning to start putting data into actually a networked approach, or into an approach where they could store massive, massive amounts of data. Computers allowed them to do this. And they continued to buy up more of these smaller competitors, becoming larger and attracting the attention of the federal government. They began to earn a bad reputation for selling data into when they wanted it, whether or not the data was accurate. This was the problem. It wasn't even that they took all these unscrupulous tactics to gather the data. But the problem was they didn't care if the data they were selling actually was accurate. They didn't care. So they would call your neighbor and say, hey, did you know one of your neighbors is getting divorced? I'll sell you this data for X. The problem is what they were selling wasn't even accurate in a lot of cases. There were no requirements. There was no regulation. There was nothing to stop them from gathering and selling data, whether it was accurate or not. Okay, so Equifax was gathering details about including marital troubles, jobs, school history, childhood, sex life, political activities, more. Okay, so think about this. They would collect data, whether you were a Republican or Democrat, for example, and then this is the kind of information that they would actually sell, because there's a lot of people that would want that kind of information. No limit to the amount of data collecting. Some of it was factual, while most of the data was actually inaccurate, and Equifax was even said to, again, as I mentioned earlier, reward their employees for finding the most negative information about consumers. They would actually incentivize employees to get the worst information they could, so then employees would make up some stuff in some cases or embellish or exaggerate, and then again, that was the data that was actually being sold. So here we go. 1971, the Fair Credit Reporting Act comes around. Why is this important? Because Equifax started this. Okay, so this is one thing you want to know about Equifax. It was Equifax's unethical tactics in this space that actually created the Fair Credit Reporting Act. The Fair Credit Reporting Act, the FCRA, was created in direct response to these practices that Equifax was unethically actually performing. Now, it's interesting because if you ever read the Fair Credit Reporting Act and the crazy things this law says that the bureaus can't do, every single one of those things that the law says you can't do this, Equifax was doing. They're the reason the law had to be created. So this is interesting because if you ever look at the FCRA and see some of the crazy things that you're not allowed to do, from the bureaus aren't allowed to do, it all stems from Equifax and their actions at this point. Okay, so now Equifax was no longer able to misrepresent themselves. Most importantly, they had to give actual data. They had to give factual data at this point. Okay, they weren't allowed to just give out information to anybody that wanted it. Okay, so Retail Credit Division was charged with violating the law. All of them were. After the FCRA was released, all three consumer reporting agencies, TransUnion, Equifax, and Experian, all faced massive fines for violating the law. Okay, so I don't put that on this slide, but just so you know, it wasn't Equifax alone. The law came out, everybody violated the FCRA, everybody ended up getting huge fines from the federal government as a result. But Equifax made a pretty big change and changed their name in 1975 to Equifax to kind of get past all the stuff that had happened in their past. 1971, FCRA rolls out. Okay, by 1975, it was established. There was no way around it. This was going to be a law that was going to be around indefinitely. Equifax was now required to adhere to these policies and these standards they never adhered to before, and they decided it was time to get rid of this past that they had, this checkered past of all these unethical practices, and get into the game legitimately, change their name, and call it Equifax. So throughout the 80s, the bureaus continued to buy up these other reporting agencies. And remember, Equifax had like 300 offices at one time. So 104 of these smaller credit reporting agencies in the 80s went into Equifax's actual portfolio. And this is what happened. If you look at the history of business credit reporting, which we're kind of doing now, then you see hundreds and hundreds of small reporting agencies. Counties had them, states had them, cities had them, and then the bureaus got so big they just started buying up all these local smaller agencies until there really weren't any left. And then Equifax continued to grow through the U.S. and Canada, and even growing their commercial division through the UK. At this time, Equifax started competing more aggressively with rivals Dun & Bradstreet and Experian. See, D&B in this time frame, they weren't really huge in the United States. They were very big in the UK. Okay, Experian's out of the UK. A lot of people don't know that Experian trades on the London Stock Exchange. Okay, they're actually out of there. That's where they're housed. They're not in the United States. So business credit reporting really took place in the UK. That's where this started, and that's why you see here that Equifax actually started in the UK with their business divisions and then eventually rolled to the United States. Yeah, sure they did. Everybody did. So did D&B and Experian. And then they continue to grow, aligning with CSC Credit Service and another 65 additional bureaus. The insurance agency part of it was actually phased out, the part that actually Equifax got into in the beginning. And then at one stage, the company also had a division selling specialist credit information to the insurance agency. So they kind of separated that point. Choice Point formerly offered digital certification services, which sold to GeoTrust in September 2001. So what's happening is Equifax now has really, really grown. So they're maintaining now today over 400 million consumer records. They expanded their services to direct consumer credit monitoring in '99. This is one of the biggest services the credit bureaus offer now. Business and personal credit services is actually credit monitoring. Interesting, isn't it? We never heard about identity theft. And then all of a sudden, the credit reporting agency started selling credit monitoring, and then all of a sudden, identity theft became the biggest thing out there. I wonder if there's a correlation. Well, that's a topic for a whole other webinar. And they're listed today on the New York Stock Exchange. So is D&B. Experian is the only one of the 3 business credit reporting agencies that doesn't. D&B and Equifax both trade in the New York Stock Exchange, and Experian trades on London's. Since its inception, Equifax has operated in the business-to-business sector, selling consumer credit insurance data. Equifax reports are still commonly used by retailers, insurance firms, healthcare providers, and as we just talked about, the big banks. So Equifax provides business credit evaluations for small business and corporations, allowing them to detect early signs of trouble. So what they basically do in the business space is they sell data to people that are going to issue credit to business owners to see what their actual risk is. It's one of their main products they have. And we will take a look at all of Equifax's business products also. And they offer a business credit scoring model known as the Equifax Small Business Enterprise, or Equifax Small Business Exchange, Equifax Small Business Score, call it a lot of those different things. And we are going to dissect that score here in a few minutes. And their model is designated for companies that provide goods and services to small businesses. Equifax's source of data today still come from the most vital information used by credit grantors to decide what sort of products or services they offer to customers. So Equifax is widely used on the consumer side more than business to still make those lending decisions for people that are lending personal and businesses money. And Equifax's system for collecting data is called actually NCTUE, an exchange of non-credit data, including consumer payment history on telco and other utility accounts. Stuff you don't really need to know. Okay, I'm flying through this stuff pretty quickly because I want you to have an idea of Equifax's history. I'm big on history. Those of you on my webinars know that. But it bores most of you, and I get that. So I'm trying to go through their history pretty quick. I just want to point out some interesting things about their history that most people just don't know, so you have a better idea of what got them to the point they are today, and then we'll dissect where they are today. So today, Equifax is one of the major credit reporting agencies used in most countries. Some of the countries where Equifax is mainly used is Canada and the United States, which is really where they got most of their start and have always had most of their exposure, and Chile, India, Mexico, Peru, the United Kingdom, and the United States. And Equifax Business Credit Monitoring Alerts is one of their actual main products. So enough about history. Okay, history bores some of you. To me, it's exhilarating, right? Because I deal with them all the time, Equifax, and very few people know that, you know, a lot of the stuff that we just talked about. They're the oldest consumer reporting agency, that their business stuff got started in the UK. So I think that stuff's important. But let's get to where they are now. So one of the biggest services that you might use from Equifax is their actual business credit monitoring and alerts. So they have a product they sell that's business credit monitoring. Whether or not you're going to buy that or not, I'm not trying to pitch it or sell it to you today. I just want you to know the products they have, their cost, what they do. So if you're building your business credit, you can kind of make those decisions. A bankruptcy alert. So if you do enroll for Equifax's business credit monitoring, they do have a bankruptcy alert with any bankruptcies that are reported. You can actually get an alert. Probably don't need that, right? I mean, if you're filing a BK, you probably know you're doing it. Derogatory alerts, judgments, liens, charge-offs, anything that's derogatory. New inquiry alert. This is important. If you are building business credit, then it's important that you know when new accounts report on your credit report, because your new accounts are what establishes your credit report and your credit score. So this is actually pretty important, the new inquiry alert on the credit monitoring. An Equifax score drop, so if your credit score drops more than 20 points, then you get notified. And then you can get unlimited bureau reports. It's like $20 a month, $19.95 a month. If you go to their website, you can get this. Again, I'm not trying to sell you on this. It's just if you're going to build your business credit, you probably want to know, can you get reporting with or monitoring with Equifax? And if you can, what's involved? Now you know exactly what you would get with monitoring with Equifax. You even know the actual monthly cost. Now, let's take a look at Equifax business credit reports. So, Equifax business credit reports have a lot of different information on them. If you hear me take a pause, I'm taking a drink of water. Here's some of the information that's listed. So every Equifax report has your company's name, your company's address, phone number, your company's fax number, and your Equifax ID. That's just their internal number they use to identify your company. So if we take a look at that, here it's kind of zoomed in, so it's a little blurry, but I want you to get a good view. So let me go back one more slide. Okay, so here is that information. Here's what this information would actually look like here. Whether they have a bankruptcy, score, derogatory items, the name of the company. This is actually alerts. We'll get to the summary section here too. All this. So this is actually an alert section here. They actually have a summary section with all that other information listed, which I'm going to show you in a second. Credit utilization details, utilized amount, and available credit. So they list all of your utilization details of your revolving accounts. Here's what I was looking for. How did I get to where I was? What was that? Okay, so those are alerts. Those are the alerts. Okay, so I put these on the wrong page. So when I was talking to you about the credit monitoring and these alerts, that is what these are right here. So these alerts are their actual alerts that come with that credit monitoring. This is what you'd see. Bankruptcy alert, score alert. Your business has a score change reported, score change, negative 467. You're down to 0. And then here's more report alerts of what you get. Derogatory item inquiry. These are the kind of alerts you get on that credit monitoring. So company name, Equifax ID, utilized amount, available credit. This is an actual business credit report. If you were to log into their member center and you were to buy their business credit monitoring, which again, I'm not trying to sell you Equifax credit monitoring. I'm not giving you an affiliate link or anything where I would get paid to do so. I want you to see an Equifax report. I'm a visual person. So instead of seeing slides about your name, address, phone number listed, I want you to see how it looks on the report. Because not only can you get this data, but other people can easily get this data on your business. Easily. All they do is pay for it, and they can get all this data on your company. So you need to know what other people can get on your company, and you need to know what you can get on other companies. So here it is. Company name, company address, Equifax ID. Okay, here's all the company information. Again, company, if it's their actual registered agent information. Credit utilization we talked about right here. And then here are their actual business credit scores, which I'm going to talk about in a minute. So their name, address, phone number, fax, this is exactly how it actually looks on their reports. Days beyond term are listed. How many days late you are. How many inquiries. Bureau messages. Legal entity has more than one website, those type of things. Okay, there's a lot of information these business credit reporting agencies put on these reports. Parent companies, all this type of stuff. So they have these kind of bureau messages. Credit scores, credit risk score, payment index, business failure score. Don't write them down. I'm about ready to dissect each one, so don't worry about it. But this is all what's on the report. How late you are, inquiries, special messages, and credit scores. Here is that section. Available credit, we already went over that. Days beyond terms, here you go. The year, here's when you went really far behind terms. Here's how it's broke down in your report. Do you have any recent inquiries? What little messages do they have? Business failure score, and your summary data is here. And you already saw those other two scores. I already showed them to you. Here you go. So 1 score, 2 scores, 3 scores. So here's their 3 credit scores, and then here's a summary of data that's actually on the report also. Here's that summary data section. Number of accounts you have, credit active since what date, charge-offs, most severe status in the last 2 years, your highest credit extended. Now listen, if you're trying to write all this down, I'm going to go too fast for you to do so. But if you stay through the end of the webinar, I'm going to send you a playback of the webinar as soon as it's available, probably as soon as tomorrow. So you'll be able to stop and play and rewind and go back and write stuff down as you wish. Because obviously there's a lot of stuff here to try to write down. It might be easier if you have access to your own video and you can just take a real quick screenshot to save it. Highest credit extended, current credit exposure, median balance, average open balance, recent new accounts and inquiries, recent delinquent accounts, recent account updates. Again, here is the section, Bureau Summary Data. That lists basically everything you or anybody else would want to know that's on the report summarized. It's simple, right? They just take your scores and all your other data, and they just summarize it for you in this section. Then they have a public record section. Do you have BKs? Do you have judgments? And if so, are they satisfied? Do you have liens filed, opened, and released? Do you have alternate company names, owner and guarantor names, business comments, reported, generated data? And here are these actual information. So here's additional information, no alternative company name. Here's the owners and guarantors. Here's other business guarantors. Here's report details. So all of that's actually listed on the report also. So public records, more on that since we're talking about that section of the report. Any business registration from the Secretary of State, a bankruptcy filing, a judgment, a lawsuit, or a lien is on your business credit reports. The surprising one probably is a lawsuit. Okay, you would expect bankruptcy, you would expect judgment, you probably expect liens. But most people don't expect to find lawsuits they are part of on their actual business credit reports. It is 100% legitimate, okay? I've actually had that asked me. We were like years ago, we were in a lawsuit where we had sued a company for taking some of our information, and somebody asked me about it. It was a weird question. They were getting ready to get started with us as a reseller, and they said, hey, what's this lawsuit you're part of? It's freaky, ladies and gentlemen. People can access your business information easily. It's not like your personal credit. I can't just go, hey, man, you're a jerk. I want to know what your credit looks like and go pull your credit just to see. I can't go to one of my enemies. I don't have a lot, really, of any enemies. But if I did have an enemy, then I'm not going to go and pull their credit report to see what's on there. You can't do that. You can't just go pull somebody's credit report. In the business world, you can. You can go and pay the bureaus to pull anybody's report you want to pull. And all of this data I just showed you that's on the report is absolutely readily available to anybody that will buy it. So that includes lawsuits that your company is part of. Whether you filed the lawsuit, whether you're the defendant of the lawsuit, doesn't matter. It's on your actual business credit reports. Now, this is a long, ridiculous slide. Why is it this way? I took this as a quote from Equifax's website because I think it's interesting. Because this is a question a lot of people have. Where does Equifax really get their data from? Well, I'm going to tell you from their mouths exactly where it comes from. Equifax primarily acquires its information from, surprise, two primary sources. First, all of its financial information is obtained through an exclusive data sharing agreement with a small business financial exchange, a nonprofit organization made up of the largest small business lenders in the U.S. and consists of information on a wide variety of credit products, term loans, lines of credit, credit cards, leases, SBA loans extended by financial institutions. The majority of the financial institutions are banks and equipment leasing companies. So there you go. There's one way. Equifax aggregates, let me see. Second, Equifax also acquires Net 30 type industry trade credit information from a wide variety of suppliers that provide products and services to businesses on an invoice basis. So what they're saying here is they get it from people that report the data to them. Equifax combines the financial data with the industry trade credit data along with utility and telephone data and public record information to create an extremely robust, current, and complete commercial credit database. There you go. That's where it comes from. So first source right here is it comes from the SBFE, okay, the Small Business Financial Exchange, where a lot of the credit bureaus get their information from. All three of them do. Then secondly, it comes from the people that report to them. The people that report the data to them on top of utilities information and public records. Okay, and I don't even think, let me see, trade line performance data, public record. Okay, yeah, this is pretty interesting. The Equifax aggregate of SBFE trade line performance data with public record, firmographics, which is a term that they coined to label the information they're actually gathering on the business itself. Secretary of State and other data elements have made its commercial database the de facto standard for doing business with small business market. One of the first actions that a new small business owner does is open a small business credit account, contract with a telephone provider, and engage a utility provider for water services. Because of Equifax data gathering activities in all these key market segments, over 99% of the businesses in the Equifax commercial database have credit experiences. So this is what they're saying is, look, most small businesses have a need for one of these services, So this is why we get the data from these places. Because this way, even from the inception of a small business, we have the data that we actually need. So who can report to Equifax? Well, Equifax requires that companies within the financial services industry have a minimum of 500 customers to report to Equifax. I get this question all the time. People say, look, can I get with somebody that can report my account? Or can I report my account? Or can I report the account of my customers? There you go. If you're in financial services, you need 500 customers a month to be able to report the data to them. Companies within other industries that are non-financial services need 2,000 customers a month to report on Equifax on a monthly basis. So you can't just report to Equifax. You have to be, let's say, a pretty good-sized company to do so, because not only do you need 2,000 customers a month, you need 2,000 people paying you on terms in a month. So you have to be a pretty good-sized company to be able to report to Equifax, have 2,000 customers or 500 in the financial services. So let's take a look at those three scores. We talked a little bit about the actual business credit scores. Now what I want to actually do is I actually want to show you the actual scores themselves so you can actually see what those three scores actually are. And I want to make sure that I'm keeping up with my time here. So I'm going to take just a quick look. Okay, cool. Okay, so credit risk score. This score predicts the likelihood of a business incurring a 90-day severe delinquency or charge-off over the next 12 months, i.e., this is their primary credit score. What I just read to you is Equifax, Experian, and Dun & Bradstreet's exact definition of their main credit score. Now, I say main because you're not used to this, right? You're used to, with the credit bureaus, you only have one credit score on the consumer side. It's not like you're ever going to pull your consumer credit report and pull more than 3 scores. You're always going to pull it and pull 3 scores, one for each bureau. And don't get me wrong, mortgage brokers have a different score and yada yada, but you're only ever going to get a consumer credit report with 3 scores on it. Well, business world's very different. If you pulled your Dun & Bradstreet credit report, you would actually pull 8 credit scores. They have 8 credit scores on the report. Equifax only has 3. Their main one is called the credit risk score, just like Experian and IntelliScore, just like Dun & Bradstreet's Paydex score. The credit risk score depicts the risk of a business going 90 days late the next 12 months. If you want to compare this to your consumer score, your consumer credit score measures your risk of going 90 days late in the next 24 months. Just FYI. So another credit score they offer is called the business failure score. Predicts the likelihood of a business failing through either formal or informal bankruptcy over the next 12 months. The business failure score all bureaus have. Equifax, Dun & Bradstreet, and Experian have different variations of this. They all offer a score that depicts their business's risk of going BK, because so many businesses do. Payment Index provides a dollar-weighted index of a business current and past payment performance based on all payment experiences in the Equifax Commercial database. So just one more additional score they offer. If you were to get their credit monitoring and look at your report, they would define all of these scores for you on the actual report. So let's take a look at these. The Small Business Credit Risk Score for financial services predicts the likelihood, we already went over that. The score is built using financial services and trade payment data, providing a higher degree of predictability. That means something to us now. We now understand this. So they get the financial services data, which was one of their main ways of getting data, and that trade data provided by their actual suppliers and people that report to them. The score ranges from 101 to 992. Okay, and it returns up to 4 different reason codes. 0 indicates BK. Okay, so 101 to 992 is the actual range for the Equifax risk failure score, for the actual Equifax small business credit risk score. Now, when we look at the business failure score, okay, this predicts the likelihood of a business failing in the next 12 months. Okay, the risk score is built using the same thing, financial services, trade data. The score ranges from 1,000 to 1,880. And it returns up to 4 reason codes. 0 indicates BK. That's what I mean by a reason code. They have these weird codes that indicate different things. One would be if you had a 0, that would indicate you actually have a BK on the actual credit report. Okay, and the payment index, this is the third score. Payment index is a dollar-weighted indicator of a business's past and current payment performance based on total number of financial and non-financial payment experiences in the Equifax Commercial database. So non-financial. They're no longer just dealing with trade account reporting and financial reporting with this. They involve everything. So on the report, there's a chart showing that provides a suggested interpretation of the payment index value. We actually saw that a little bit earlier. So you have these credit scores. Why would your credit score drop? If you happen to have an Equifax credit score, your credit score goes down, why would your actual credit scores drop? Well, there's a few different reasons that your scores could drop. Okay, their model looks at many factors to derive the scores. Okay, factors include, but are not limited to, all of these. An increased trend in delinquency, obviously. The presence of derogatory public records on the business profile. An increase in the number of credit inquiries. The number of accounts on file. Balances outstanding. Payment habits. Credit utilization. Related trends over time. All of these things are what's calculated into the score. Any changes in these areas will and could lower the score. Disputing negative information on their actual report. So let me actually do this just for a second, just so this isn't too bad here. We do this real quick. Boom, and slideshow from current slide. Okay, so disputing negative information. Equifax provides a dispute process to address any inaccuracies. The dispute process is not intended to provide the business an opportunity to dispute and request the removal of accurate information. Only that information contained in the public records and bureau data sections of the report may be changed as a result of a dispute. Look, ladies and gentlemen, here's the deal. There's no Fair Credit Reporting Act in the business world. You don't have any legal right to dispute your credit. There you go. It's as simple as that. So if you're thinking about disputing your business credit report, the first thing you have to accept is you have no rights. It's not like the consumer report. Everything on your consumer report has to be 100% accurate, verifiable, and timely, or it must not be on the report. That is the law. But there is no such law in the business world. So they can tell you what you can dispute, what you can't. They can tell you how you can dispute, how you can't. They dictate the entire dispute process because there is no law that regulates how disputes must be handled in this space. So you have the opportunity to provide a statement of explanation. You can add a comment to your credit report. Doesn't mean you can dispute all the accounts. And the comment can be reviewed by recipients. Comments are worthless. You could put a comment on your personal report too. No one cares. You put it on your business report. No one cares. They do this so you can get some kind of warm, fuzzy feeling like you're doing something. You're not doing anything. Okay, nobody looks at comments on credit reports and uses that for credit decisions. It just doesn't happen. So they let you put a comment on the report, but it doesn't really even make a difference. And they may require supporting documentation if your comment's like outlandish. Like you can't just put some outlandish comment with them. They're going to ask you for validation. So don't be surprised if you want to add a comment to your business credit report with Equifax. If they say, look, you claim this and this and this, we need evidence of your claims to even put this on the report. Okay, you must have credit monitoring with Equifax to file a dispute. Well, that's convenient. Experian at least gives you a way to dispute without getting credit monitoring. D&B does too. You can call them. You can dispute online through an integrated system where you don't even have to get their credit monitoring. Equifax, not so much. They make you get credit monitoring to dispute it. And then once you have that, there's a member center that you just kind of saw screenshots of the member center. That's where you actually file disputes. And you fill out what's called a research request form. And then once that form is completed, then they send it to the reporting agency to verify, and it can take 45 to 60 days. So that part of the process is that much different than consumer reporting. You know, if you dispute something on your consumer reports, you send in a letter to the bureaus. They send a letter to the creditor. They actually don't send a letter. They do it through a system called eOscar, but they electronically file the dispute electronically through eOscar with the creditor, and then the creditor or their computer automatically or manually responds to that dispute. Well, in the business credit world, not that much different. You just send a dispute to Equifax. They send the dispute to the actual creditor. The creditor verifies it or says, yeah, they're right, this is wrong. And then within a month and a half to 2 months, which is double the time of the consumer reporting, restrictions, then they actually get you results. So reports for other companies. Don't forget, as I mentioned, you can get reports on other companies' reports, and other people can get your reports. Here is why I'm telling you the price, because I want you to know what your data costs to other people. On this webinar, you may never want to pull credit on another company. I don't know. I don't know if you lend money to other companies or if you'd have a reason to. But you need to know that anybody can pull your data. They just need to be willing to pay for it. How much? There you go. $50 to get a single report on another business. Or they get a discount and you can come in and get $400 and get 5 reports, which doesn't make any sense at all. Because $250, I don't know how that works. Because if you paid for each single report, then you can get 5 reports for $250. So I don't know why they're charging $400 for 5. But anyways, it's a great deal. You could buy 5 of them individually for $250, or you could just buy 5 in a bundle for $400. That's a good deal they're offering. So $49.95 for one report, $399.95 is what they claim or charge for 5 reports. Bureau summary section, summary of financial and non-financial accounts, public records, 2 scores, the Equifax credit risk score and the Equifax business failure score are on there. Payment trend and payment index, a 12-month payment trend in comparison to the industry norm. So they don't just show your payment trends, they compare it to what's the norm in the actual industry. Anybody can get all of that data on you for $49.95 by today, and you can get the package deal where you overpay for 3 reports. Pretty good deal. So here you go. This is all the information anybody can get from you if they're willing to spend $50. Now, also don't forget, Equifax offers marketing services. Our clients use these, use D&B's Hoover system, because if you're in the business-to-business space, well, think about it. Who has data? The reporting agencies, right? I mean, if you really want to segment data to send lists and stuff, the reporting agencies are probably one of the best ways to do this. So some of their marketing services include Equifax Decision 360. You see this all the time related to Equifax. Helps determine which consumers are better candidates for credit and provides a complete assessment of consumer payment history, individual household income, assets, debt levels. Okay, so this is pretty interesting because this has nothing to do with business. It actually has to do with consumer risk assessment, but it is one of the big services that they actually offer on the monitoring side. And it just helps you know which customers are in the market, which ones are kind of higher risk. Credit information, income employment verification, asset property data, utility payments, credit capacity scores, demographics, macroeconomic trending, custom modeling, analytics of your own account data. All of that is what's in this Equifax Decision 360 model that they actually have. And other Equifax services, EFX links. So you can actually search customer database for business owners. So if you're looking for people to market to, this is a pretty good resource. B2B marketing lists. So you can actually build and buy a list from them, which is pretty cool. Customer data management. Keeps your information up to date. So a lot of people don't have customer CRMs or good ways internally to manage their own data of their own customers and stuff. Equifax offers resources to help you manage that data. Now, this is important because you think about Equifax and you think about credit reports and credit scores, but people commonly forget that that's not what Equifax does. Their whole purpose is to do one thing: collect and sell data. That's what they do. Credit monitoring, business and consumer, credit scoring, all that other stuff are just extras. Their primary purpose will always be the collection and selling of data. So if you're using data for marketing lists to manage your own customer data, well, they're obviously pretty good at managing data, so this might be a service that you choose to use from them. New business hot list. So access a weekly list of up to 40,000 new businesses. Pretty cool. So let's say your marketing services to brand new startup businesses. Well, where are you going to go to get that data? Well, Equifax. Equifax has 40,000 new businesses a week, which doesn't sound at all right compared with the amount of businesses that start in the United States, but this is what they claim to have. So they have a list you can buy of all brand new businesses. Again, most of the stuff would mostly be used for marketing purposes. Other Equifax services, risk filter, identify and rule out high-risk customers. Business principal reports, pretty important. Get report info on the business owner. So you saw that wasn't on the business credit reports, but Equifax and Experian sell models where you can get that. Now, Experian sells a blended model, which is very popular. It annoys me because the whole purpose of business credit is for you to build credit for your business that's independent of what's on your actual consumer credit report. I don't like blended models. Experian blends your business owner data with your business data. It's crap. Excuse my language. I don't like it. Equifax Not is not so much, but they will sell business principal reports with what's on the actual report from the actual business owner themselves, okay? And also supplier evaluation products, evaluate risk for suppliers. So here's some other services that you're primarily going to look at. Now, I do want to kind of take a look back. I do want to look at some of these business credit reports again. I hope you don't mind. We have time, and I don't have any other new slides to show you. So I'm going to do something I usually don't do, which I'm going to go back because I think that this could make a little bit more sense now that we've gone through it. So let's look at this again. I want to touch on and point out a few things that are most important to you that you are going to care about. So this is your business credit report. Makes a little bit more sense now. So here's the company profile data. Here's all your registered agent data, your utilization. Here's that credit risk score. Remember we said we went as high as 992 to 101. Here you go. Here's that actual score range. Very different here, okay? Most people are used to Experian and Dun & Bradstreet. It goes from 0 to 100. Okay, those are the big guys you need to worry about. Experian and Dun & Bradstreet, their scores go 0 to 100. With Equifax, here's 101 to 992. Makes more sense. Remember, anybody can buy your report and get this score. Payment index, not so much. The payment index we saw was not one of the things they commonly offer on the business reports. Credit risk score was, but here's your actual payment index, 0 to 100. And this basically measures what time frame you're actually paying your bills. Now again, the credit risk score is 101 to 992, but they do have a model that goes from 0 to 100 like D&B and Experian, and this, like D&B and Experian, although it is not their primary score, does actually go off of how late you pay. So D&B and Experian are the same way here. Experian's new model is a little bit different, but they do have, all three bureaus have scores that monitor only your payments. And with Experian and D&B, it is their primary score. Not so much with Equifax, but they do have that same score model. So they do have a score model that is used for a lot of lending decisions that mostly ties in with how you pay your bills. Do you pay your bills on time? Do you pay them late? How late do you pay them? If you pay them early or paid as agreed, you get a 90 to 100. If you pay them late, your scores start to go down. This is important because 80, if you are looking at Experian and D&B, is excellent. It's good credit. Here, it's actually that you're paying late. So a little bit difference there. With Equifax, 90 and above is good credit, and below is not. So some important things here to know these credit scores. So let's take a look a little bit deeper. The days beyond terms we looked at. Inquiries, very important. If you're starting your business credit reports, you're going to need to see when you're actually getting approved with Equifax accounts and which one of those Equifax accounts are actually reported. Okay, and then here's that other score, the business failure score, 1,000 to 1,880. Now, I didn't plan on doing this, but I'm going to do something here. I'm actually going to show you some companies that report to Equifax. I have maybe 2 minutes to do so. Let me see if I have time to do this. CreditStatusNow.com. I'm going to log into our this is actual business finance suite. So if you're interested in getting business credit for yourself or you building it for other companies, this is the main system that we use to do so. My computer's running a little bit slow today, so I expect the login to take a couple minutes here. Okay, so let me go and see if I can take a look at some vendor accounts. Now, as you're about ready to find out and see here, most companies just do not report to Equifax. These are all starter accounts. Experian, D&B. I'm just going to scroll through really quick. Okay, so here's one. Reliable Office Supplies is a starter vendor that reports to Equifax. You need to write this down. Reliable Office Supplies. That's going to be very important for you guys to keep track of. Also, That's about one of the only starter accounts that reports to them. Let me see who else can, if I can find out who else does report. I'm going through real quick here. Okay, so Amazon.com, once you do have some established business credit, Amazon does report to Equifax, which is going to be pretty helpful for you. And okay, so there's some starter accounts that do report to Equifax. Let me take a look at some revolving credit accounts to see who actually reports to them so you can get a better idea of this too. See, as you guys can see, it's all D&B and Experian here, right? So anybody that's watching me scroll through here, you're seeing it's all mostly D&B Experian. Walmart reports to Equifax, business credit card on that. We already know Amazon does. Dell reports to D&B only. Okay, Sears reports to Equifax. Let's check out the gas cards and see which gas cards do. Exxon Mobil does report to Equifax. So here's some for you that do report. And most of the Visa, MasterCard sources, CSI, like the TV show, Gas Card, they do report to Equifax too. And KeyBank has a credit card for Equifax. So that gives you at least some of these accounts so you can actually take, actually, you know what, I'm sorry, guys. I had the wrong screen pulled up when I'm doing that. My bad, man, my bad. Okay, so I don't have the time to run through that again. Well, I'll do the business credit reporting real quick here. Let me do that. My bad. I had it pulled up on my other screen. I'm going to use that screen again. Okay, so we went through. Which one did we just see there? Okay, we know Walmart did, and we know Amazon.com does. We also know Sears does. We know that ExxonMobil does, and we know that KeyBank does. And then on step 4, as I was trying to scroll through here pretty quick, I was looking at starter accounts, and then I was able to find reliable office supplies. They're one of the ones you should look at to get started with initial business credit, and then we looked at Amazon and some other ones. So, all right. So that being said, I'm going to go ahead and wrap this up because I have another webinar in about 3 minutes. So hopefully you got a lot of information about Equifax. Guys, this was a hard webinar to put together because the truth is there's not a lot of information available out there about Equifax, and I now believe you have all the information you're going to need about them. I mean, you looked at their whole history, their whole past, where they are now, what they're doing. We dissected their 3 business credit scores. We looked at every aspect of a business credit report. We looked at the other services that Equifax actually offers, including their credit monitoring, prices for all of those services, on top of a bunch of other stuff. And we even had a few extra minutes so you can actually see the accounts that report to Equifax. If you didn't get a chance to write them all down, you're going to get a playback of this webinar. That's like golden for you if you're building business credit. I just told you the starter accounts and revolving accounts you can get with Equifax. And there's a ton of stuff on my YouTube channel about building business credit. So if you want more information, I'll get started with us as a reseller about getting business credit for yourself. Check it out, creditsuite.com/business credit. Pretty simple, creditsuite.com/business credit. If I could ever be of assistance to you and answer any questions you might have relating to business credit building or getting started in offering business credit financing services to customers, feel free to reach out to me. There's my number, 877-600-2487, ty@creditsuite.com. Thank you, everybody, very much for taking the time to attend this webinar. I hope you got a lot of great information about Equifax. Thanks, everybody. Have a great day.